Good afternoon, traders. It is Friday, June 3rd, 2016, and the U.S. stock market is closed. We had an absolutely horrible day today. Just to give you an idea of how bad things were, um, yesterday, you know, really looked good for a while. And let me just walk you through our equity swings. At one point, midday yesterday, on Thursday, we had open trade equity of positive about $20,000. I was disappointed in that slipped to about positive $12,000 on the close yesterday. But still, I was encouraged by what happened yesterday, and I also felt, as you know, that the Dow was going to go up, and I honestly thought we could get back to that 20K area on the open this morning, and my feelings were reinforced by the fact in the aftermarket last night that 12,000 increased to about 16,000 in open trade equity in the aftermarket. Of course, I don't trade the aftermarket, but still, usually that's an indicator, can be an indicator at least, of what's coming the following day. Unfortunately, this morning, stocks opened up and our equity fell to about $8,000 positive, and I took a screenshot of that and we'll post that on the website. So we've gone from 20,000 to about 8,000 on the open this morning. But then what was just really sickening is in the less than an hour time that we take to exit, we went to negative $10,000 closed out. So take it from the high point of yesterday, positive $20,000, to the close today, we went from positive 20 to negative 10, a $30,000 downswing. That's pretty horrible, and I'm going to tell you, emotionally, it's just gut-wrenching. So, the problem that we had today, this morning, was a jobs report came out. It was the worst jobs report that we have seen in 5 years, and of course that knocked stocks down, but in some ways it didn't knock them down nearly as hard as you might think. And then they come back, and there's this crazy thinking that goes on that, yeah, a bad jobs report is a bad jobs report is a bad jobs report, but it also means they're not going to raise interest rates for a while, and that's good for the market. So, as you can see here, what happened today, we had this screaming downside Dow on the open this morning, and then it climbs most of the day, a little sell-off there at the end, but and it closed down 31 points. That isn't what I predicted, believe me, but still 31 points down isn't very bad on a day that they released the worst job report in the last 5 years. Look at this pattern, folks. This is the last 3 days. We see the same pattern every day. This is Wednesday, down hard, then it builds all day. Yesterday, Thursday, down hard on the open, then it builds all day. And today, the identical problem, identical pattern, down hard, and then builds all day. This is absolutely the worst thing that can happen to us, because it's during these down patterns that we're getting out of these markets. The worst possible time to get out of stocks is down here that you see on these 3 days, and then of course these up patterns are causing us to get into things, and you know, and then today we just saw huge profits give way to rather large losses. Absolutely terrible day. I mean, this pattern is hideous. Now, I will tell you something though, just this pattern can't repeat itself on Monday. Okay, it just won't. You know, markets don't do that. They will do something opposite of the pattern. So I'm just telling you, I'm still calling it up again on Monday. I really do. I mean, the stock market isn't going down, folks, but it's not going up in a way that we can make money with it. I mean, nobody's making money with this pattern. It's just horrible. I don't know what else to say. You know, and I know there's some people that going to try and think, well, maybe I'm getting out at the wrong time since we're getting hit here 1, 2, 3 in a row. But I've said this time and time again, the sweet spot, the point at which we get out, it changes all the time. And just because we've had 3 in a row, that shows that I'm just totally wrong in terms of where I get out. It's going to switch. And I can't tell you how many times that I've gotten out early and then watched the equity just explode to the top side. There's no magic answer for this. There just isn't. I'll show you some of the stuff that happened. I'm going to show you a couple of the bad ones, because this pattern was repeated over and over again. Practically everything we were in repeated this pattern. This is Agios Pharmaceuticals. We got into this like with 2 hours to go or so yesterday, and it opens, you notice this opens virtually unchanged, and that's why we have positive open trade equity on the open even this morning with the jobs report out. We you know, we could have gotten out of this and had a tiny little profit if we could have gotten out right on the open there, but it just tanks. It comes down here, and we lose $3,000 in Agios Pharmaceuticals. The same thing happens with Labu. This is the the biotech bull. Okay, and the biotech bull really got whipped today. We bought that yesterday. In the middle of the day, down it goes. We're socked for another $3,000 in the bio bull. Here's a stock that we did, you know, technically we did pretty well with this. This is CRLB, and this is also a bio stock. We had bought this yesterday. When CRLB was up here, we are up about $17,000 in that sucker. Beautiful, beautiful trade. But as you know, yesterday, if you saw the video, I was pretty disappointed by the sell-off. I still thought it might go higher, and folks, it almost did. It opened a little bit lower, but then it bounced up here, and it was up here, you know, in plenty of time to get out of this. If somehow I had a crystal ball, I could have gotten out of there with something on the order of $15,000 up here. But bam, down it goes, and we are basically stopped out with $6,000 in profits. But it's pretty disappointing to go from, you know, $17,000 up here to $6,000 getting out. So even that, even though it was profitable, it was disappointing. We are trading a portfolio of some new stocks, and we are doing well in those new stocks, surprisingly enough. And that is about the only thing encouraging here. This is JNUG. This is this is the Gold Bull. It's going to go up when gold prices go up. Look at this monstrous gap here this morning. We buy the gaps, we got in there, and it kept going, and it closes absolutely on its high. We have $3.6 thousand in open trade equity in the gold bull. So that looks real good. And incidentally, after getting just absolutely eviscerated today with all those stocks that we got into yesterday, we got into 5 new positions today. Everyone is positive. Everyone is positive. And this is one of them. And we're holding almost $5,000 open trade equity over the weekend. So I you know, basically we gained back half of those losses with just 5 stocks. So that's another reason I'm calling the Dow up. I honestly, I just feel like maybe these crazy markets have shaken enough people out that's going to move the other way now, and you know, we might do pretty well, do much better on Monday. Let's hope so. Anyway, bad way to end a week. This is Trader Bob signing off. I'll see you here on Monday.